All right, guys. So today is February 8th. It's Sunday, and I basically had a friend or a family member who contacted me this week, incredibly nervous about the market pullback, which we had in the stock market, as well as oil, commodities, oil producers, all of them, my investments as well. So it was a major market pullback. I'm sorry, minor market pullback on a daily time frame. And this individual basically questioned, basically saying, I'm not sure your investment thesis is playing out now. Folks, it was a one-day move. If that one-day move made you nervous, you're not the right person for this. So I'm recording this video to show people who may be following my strategy some of the coming risk in the market, so you understand what you're up against before you go further down this path. And you're going to experience major volatility. Okay, this is not something you're going to be able to watch daily price action on if you intend to utilize the investment strategy I'm using for myself. My suspicion is at some point while holding this position, you will probably have at least a 50% correction across your entire account. Okay, so I'm not expecting that to happen now. I expect my account to go up prior to a pullback. But my point is there is going to be extreme volatility. So I just wanted to quickly show you some risk in the market. So what you're looking at is a chart of the S&P 500. This gray bar is the prior fractal from the previous cycle beginning in the 1980s and running through the great financial crisis in 2008. Okay, so I overlaid that over today's market cycle, beginning with the bottom in the 2008 financial crisis, which the bottom occurred basically in 2009. I want you to see something. Look at the similarity, how closely we are following the exact market cycle from the prior period. Are there periods where we deviated? Yes. During that deviation, where do we come back to? The same basically trend as the prior cycle, right? So here's what I want you to see. Prior cycle, wave 1, wave 2, wave 3, wave 4, wave 5. We are nearing the end of wave 5 in a multiple decade monthly chart view of the S&P 500. That means we have major correction ahead, okay? So when I overlay that fractal pattern from the prior cycle, you'll see we are nearing the top of this wave 5 pattern, okay? I can't be certain that I've overlaid this exactly as it will play out. I can't be certain it will follow it to the T. We could go nowhere from here. We could break downward tomorrow. I don't know. But when I lay the exact market cycle from the prior period, which we have followed very closely, it's projecting that basically we're going to hit a top probably by the end of this year, and we're going to start rolling over by May or June of 2027. Okay. What do we have from that rollover? According to the chart, we're going to see a 45% decline, not from where we are today, but from where we reach the market top. Okay, so let's say the S&P 500 continues to climb between now and the end of the year. We hit 8,500 as a market top. I'm talking about a 45% decline from 8,500, not from today's 6,900. Okay, so we could see major upside potential for another couple months. We may not, don't know. I'm just telling you what the fractal from prior cycles that we're following very closely, what they're projecting. All of this coincides and is supported by all the information in my prior videos, as well as an abundance of other things I have not discussed with you. Okay, so if you look at this, if it plays out like it did last time, 2008 was right here. This is where things broke last time. Okay, this is basically the mid 2030s. I'm expecting a lot of things to go wrong mid 2030s. All right, so there is a chance that you'll see from all the charts, I may pull out of all of my positions by this time. I'll make judgment calls as I'm monitoring things, but I may pull out, let it do what it's going to do, try to find bottoms again and ride it much higher in the future. But what am I telling you here? From this top in 2027 or 26, whichever you want to look at it, till almost 2040, you're going sideways to down. That means if you do nothing to your retirement account, once this thing tops, it will take you till 2040 to break even again. Okay, I'm not leaving. Inflation is going to eat the hell out of your retirement account during this time. This is what I was projecting with capital rotation occurring in video 1. And as you can see, this is probably going to help that capital rotation chart come to fruition. So this is just S&P 500. This is eerie how precise we have followed this pattern from prior periods. All right. Look at NASDAQ. NASDAQ, same thing. I overlaid the prior cycle to the best of my ability over the current cycle. It's saying same thing. We're in the top. We're in wave 5. This one, look, tech is overvalued. It is definitely nearing bubble. Is that bubble done? Possibly not. This is showing same thing. We could continue upward for a while before the market corrects next year. Will it? No idea. Just showing you with the charts, telling me. Dow Jones, same thing. We have eerily followed the prior cycle. When I overlay it over the current cycle, we're virtually following the same thing over and over. You think history doesn't repeat? If this doesn't prove to you that it at least rhymes, you're blind. But what is this projecting? Same thing. Probably a market top sometime next year. This one, the time frames are a little bit different, but it may just be the way I have it stretched to lay out on here. The S&P 500 is the one I'm giving more credibility to. Oil seems to coincide with it. The chart that I have laid out for oil with the fractal that I've shown you in prior videos, but same thing here. I took the prior period move from the prior cycle and I overlaid it over today, and this is what it's projecting. My video one, based off of the expensive and cheap end of the channels I've shown you before, my projection was by 2032, $513 barrel oil. That's an 8x increase. This is projecting basically the same thing, $500 oil by 2033. Okay, not precise. I don't know if we'll hit it. I don't know if it'll be that exact. But multiple methods that I'm using are coming up to the same figures. All right. What does this show? This shows that we are, like I see in the charts, looks like we're trying to break out in this downward facing wedge. Okay. So if we follow the prior cycle, oil is projecting the same thing as the S&P 500 chart. Sometime around April, May, June next year, major downturn. Okay. This is a 50% correction in oil from its peak that I expect we will hit next year. What does this mean? It means if I'm buying my positions down here, I'll probably go up 50% and back down 50%. 2028, continuing my move forward higher. Okay, so why am I buying my positions now and not just waiting till 2028? Well, number one, I'm probably going to more than double, maybe even triple some of my oil plays during this period. I can make a decision here. Do I want to sell my positions, take my original investment off the table and play with other people's money for what I leave in the position? Or maybe it does not correct downwards. Maybe it corrects sideways. I'm going to leave that up in the air. I'll make the decision when it gets here. You need to, you basically have one or two choices. You either need to learn a lot to be able to track these and make on-the-fly judgments like I'm going to, or you need to just make your decisions on which company you're investing in and close the book. Don't look at the pages on a daily basis and let it ride for 7 years. That's what I'm going to suggest. Because if this 50% pullback is going to feel like it hurts. I might return to my original investment. But if I don't buy here and it goes sideways, I missed out on this buying opportunity. I'm not going to assume that this projection is correct, right? So I'm buying here, hopefully double my money on all my oil plays. I'll make a decision here. I may cut my position size in half, put my original investment back in my pocket, and then I have nothing at risk in these positions. Then if it does what I'm projecting, I'll look for a new bottom and I'll buy back in with more money, basically increasing my holdings even more. But this long-term is showing the same thing as the S&P 5. It coincides very well. Gold chart, same thing. I overlaid the fractal from the prior period. And my suspicion is we probably have hit the top in gold for an extended period. We're probably going down to sideways consolidation, probably until the end of 2027 or so, beginning of 2028. We could see gold pull back as far as $3,700. Worst case scenario, maybe even $3,000. So, be prepared. There's going to be another entry coming ahead, but maybe it doesn't pull back. Maybe it goes sideways. If it goes sideways, you'll still be in a better position to buy in the future. I told you in prior videos, I probably would not enter gold or silver positions, the miners on those metals, just because of the way they moved so far, so fast. I knew this pullback was coming, and I think I'm going to be proven right on it. But long term, even if I bought today and experienced this pullback, if I'm sitting in my position for 7 years, I'm still, according to this chart, going to see $11,000 gold. Silver, same thing. If I look at the fractal that I overlaid to the best of my ability, we are probably going to have a pullback to somewhere between $60 and probably $50. Worst case scenario, it could pull all the way back to 30. Do I think it will? Probably not. Does this project that it could? Yes, it does. Either way, buying at the top of the recent move, not a good idea. This chart predicts the same thing. It's probably going down to sideways through 2028 before continuing drastic up move. So it'll say I did buy the top and I rode this thing out. Am I still going to make a lot of money if I hold my position long term? Yes. 2029, 30, 32, somewhere in there. I could be looking at it at potentially over $1,000 silver. If I hold it even longer term, this sounds very unrealistic and it may not come to fruition. Hopefully it does not come to fruition. It's going to mean really bad things for the economy. But this thing has much greater upside potential in the long term. So my point is, with all the market risk that I just showed you on upcoming pullbacks in the stock market, commodities and everything else will sell off with them, okay? When those sell-offs occur, you have to make a judgment call if you're getting out the positions or if you're going to ride them long term. I can't make that decision for you. My suspicion is I will probably be buying because of where I'm buying. I'm buying at a place where even with a 50% pullback in the future, I will probably never reach the point of losing money on any individual company's position. I'll probably be able to stomach riding them to the downside because nothing goes up in a straight line. I told you, this is a very long-term strategy. This is not a daily strategy. If you are going to suffer emotional distress from single day moves, you're either the wrong investor mindset and not suited for what I've shown you, or you have too much of your overall wealth in the position to where if you did go negative for a while, it's going to hurt you really badly. And you're not going to be able to emotionally deal with that. If either of those are true, I don't want to be responsible for you experiencing that distress. You're probably not the right person for this. But if you have discretionary savings, discretionary income, want to put a portion of your assets, I'm all in on these. I have confidence in my positions. I have convictions in these positions. I've done the research. I have a lot more information supporting my thesis beyond what I've shown you. I'm in these. I'm not going anywhere. I'm holding them at least through 2032, possibly 2035, and some maybe even longer. At some point along the way, will I take some of my profits off the table and make sure that my original investment is protected? Yes, I will. So let's say in oil, or even better, let's look at silver. If in silver, if I rode this thing through 2030 and it reached its goal here on this chart, would I sell a significant portion of my silver and wait for a new bottom to form? Yes, I probably would. I'd wait to ride the rest of this wave till I get a better entry back here. I'm still in the position for long term, at least 7 years for my current holdings. But when we reach this point, declines, it could be pretty significant. So if I literally sat on this and did nothing with it till 2040, I'm still going to do fantastic. But I'm going to suffer extreme emotional distress during these pullbacks. Like, for instance, the chart's predicting right here, this could be a 96% pullback. Do I believe that's going to happen? No. Is silver going to fall from 5,000 an ounce to 157 an ounce? Very unlikely. Is silver even going to reach 5,000 an ounce by 2032? Very unlikely. This is a projected path based off of prior cycles. They're not exact. They're not perfect. It's very good indications of the direction as well as the lengths of the waves, but not necessarily the actual prices. So anyway, wanted you to be clear that you're going to experience extreme market volatility during this. If this chart comes to fruition and we do have this sell-off in the stock market, you're going to have sell-off in your positions. Like I said, my expectation is that my trades, my investments will be up substantially enough to where a 50% pullback, I will still be in the positive. I could be wrong. Maybe my account goes negative for 2 years. I don't know. But in silver and in uranium, I've used this exact strategy since 2017. So in silver, 2017, back here, I was starting to accumulate at the $17 an ounce range. I accumulated all the way up until $30 an ounce, give or take. Have a shit ton of silver. When we hit $120 silver, I was up over 5x on my silver trade. We've since pulled back into the $70 range, and I'm still sitting pretty long term. I know this is a couple year consolidation and it's still going higher. I haven't sold anything in silver. So uranium, I did. I got out of the majority of my uranium position and still kept my profits. So I took my original investment off the table and a little extra, and I left some on the table. And that's still there. Well, now that uranium has reached the bottom of the wave that it's in, or my perception of the bottom of the wave, I've started redeploying in uranium with the rest of what I pulled out, and I'm rebuying back in at a lower position, increasing my shares compared to what I owned previously before the pullback. So while I have the silver chart up, this is the long-term view, the monthly view. But it made me think about entering a position. How do I enter a position? Okay, so I'm going to use the company Joy as an example. So Joy is right here in this list. Joy on the monthly chart, you'll see we had an A, B, C correction, wave 1, wave 2, wave 3 in our future. We have not yet broken out of the resistance above what I believe to be wave 2, but it appears we're going to. It looks like we're forming this little flag pattern that is likely to break upwards, okay? This is looking at the monthly view. So I'm considering starting my position here. Well, before I start my position, what I'm going to do? Look at the smaller time frames. What is the weekly chart telling me? Well, the weekly chart, we had an A, B, C correction, wave 1, wave 2, same as the monthly chart. But what do I see on this smaller time frame? This is potentially a head and shoulders pattern, indicating if this breaks down here, we could fall down to about right here at support, maybe even $2 a share. I could be down over 30% on my position. So on the longer time frame, it looks like we have a bull flag forming. It looks like a bull flag here, but I do see this chart pattern that makes me think, okay, there's a potential chance we could fall to the downside. So I am taking 1/3 of my anticipated position right here. If it starts breaking out, I'll buy the rest of my position. If it continues breaking down, I will wait till a short-term pattern develops a bottom. I'll take another third. I'll buy another third at lower cost basis. If it keeps falling, I'll do it again when I think we've really reached the bottom and take another third. What did that do? It just let me keep buying an already cheap company at even cheaper prices, reducing my basis for what I know is coming in the long-term positions. Well, let's look even closer at a daily time frame. Daily time frame, we had, this is more detail that makes it appear, that head and shoulders could be forming. All right, so this is likely wave one. This is probably wave two. But does that mean wave two had to stop right here and has to go straight up? No, wave two could, I could just be seeing part of the pattern that's forming. Maybe this is a bear flag and we're going to break downwards to here. And this will be the full wave two consolidation. Maybe we haven't reached the bottom of that. So I'm looking at my shorter time frames to start taking a position. I'm not, let's say I want to invest $1,000 in this company. I'm not going to buy $1,000 worth necessarily here. Okay. I wish I could help you all manage your positions and time these things perfectly, but I can't. I don't have time. I barely have time for myself to do this. So my advice, learn a lot more about this stuff, but understand if you buy all of my positions where they're at, you hold them long term, you've seen the evidence. I don't believe there's a way that you can't significantly profit from them. But does that mean that you can't be negative for 2 years? No, it does not. I told you from the get-go, these are long-term positions. Okay. And this is not what your investment advisor is going to teach you. This is how to grow significant wealth. This is not to compete with the S&P 500 on, a quarter by quarter basis. All right. I can be down significantly in these. Now, oil, I'm showing you oil plays because that's what I'm buying right now. But I'm not all in on oil. Maybe 30% of my account is in oil. The rest could be 5% nickel, 7% coal, 10% uranium. I still hold my silver positions. Mine is more diversified. Okay. If I were buying today, would I copy my list of 70 companies and buy them all at the same time? No, I wouldn't. Some of those have already moved. And I told you on those videos, some of them, you've already missed the best buying opportunity in the short term. In the long term, you still have tremendous upside, probably in all of them. But you could suffer 50 or 70% declines in the silver miners that I hold in my account. I would definitely not buy those right now. But anyway, if I were starting today, what would I do? Let's say I had very limited amount of money, $1,000, $2,000. I wouldn't buy 72 different companies and split that up and be purchasing a few dollars of each one. What I would do, I'd look through my companies and find the best of the best, the cheap ones that are cheapest now. Most of those are going to be oil plays, right? So SM Energy comes to mind. That's a great one. Obsidian Energy. There's just a couple of those. There's some in the forestry companies. There's some in the chemical companies. I would be buying the cheapest companies. When I say cheapest, I don't mean how much it trades per share. I mean cheapest in that it is cheap compared to oil or whatever commodity its sector is. And oil is cheap compared to all other commodities and assets. So that's what I mean by cheap. All right. Go back and rewatch my videos a couple times if you need to. So that's how I get into my positions. If I bought this position, right here, let's say I bought it and I went back to the monthly time frame and let's say I had a major breakdown. Let's say we have credit markets meltdown, then S&P 500 crashes overnight. Well, if I fell and broke a monthly trend line, let's say I broke this line, I'm probably getting out of position, taking my losses and waiting for a new bottom. Okay, something broke in the markets. And if this were a long-term position that I entered way back here, I don't care. I'm letting it ride. But if I just got into the position, I'm not going to watch 80% of my company disappear when I can buy it back cheaper later. Okay, so anyway, look, I get it. It's confusing to those of you that don't know what you're doing in this. The main point of this video was to show you, you have major market events on the horizon. The S&P 500 is the primary one I wanted to show you. If you can't stomach the volatility, either make a very small allocation of your wealth to this strategy or don't follow the strategy. Okay. Nothing in my investment thesis has changed because we had a small pullback last week. My portfolio could decline 20% tomorrow and nothing is changing in my investment thesis. Let's say the government has some intervention in the markets or credit markets freeze up and this thing just drops tomorrow, precipitously falls downward in a single day or 1 week move or multi-month, a couple months down, nothing changes the thesis. This is multiple decades of financial pressure. There's so much money in this that government intervention can't change it in the long term. It can move things in the short term. What they can do can't stop this over more than a couple month period. They may be able to, change things and move them downward or upward, whatever they're trying to do in a very short term fashion. This is unstoppable. Nothing stops this train, as Lynn Alden says. So anyway, I hope that clarified some things. Hopefully you see, we do have major market risk coming. When the S&P 500 falls, everything in my account will sell off. People have margin in their accounts. What does that mean? They borrowed the money for their investments. When investments start falling, the bank is going to do a margin call set and tell them, hey, you have to give us more money to continue holding this debt. What does that force them to do? Sell positions. What are they going to sell? Whatever's in their account. It does not matter. So maybe tech stocks are overvaluing what starts to sell off, but let's say they own oil stocks and gold stocks and Johnson and Johnson and healthcare, they're selling them all to create the funds to meet their margin call. It's going to be a shorter term downturn for oil, healthcare, all of those things than it is for what caused the sell off, tech stocks. But nonetheless, everything's coming down with it in the short term. So look, there's a lot here. After speaking to a couple people, there are some that wholeheartedly get this. I have full faith in their ability to follow it and do it. They're very, up to date on things. There's a lot of y'all that I've spoken to. It concerns me you following this because you're probably going to make emotional decisions and sell at the worst time. I can see it from some of the comments I've heard. I can see somebody starting a position, selling down here during the worst time to sell after all the loss occurred, then the market returning and their positions going up and leaving them behind, and just them losing in their investment. If you can't hold this for 7 years, you don't belong following this. So anyway, I hope that you see how eerie it is that prior market cycles, how closely we're following them today. History may not repeat, but it definitely rhymes. It just doesn't prove it to you. These cycles are predictable. I could take the same pattern and throw it on a shorter term and shrink it down. It's going to follow it as well. So that's all I have for today. Hope this clarified things and you understand what's ahead for us. I want to reiterate, you would likely at some point have a 50% decline in your account. And what I'm telling you is I'm holding through those. Or at minimum, I'm pulling my investment off, or at maximum, I could possibly, like I said, pull my initial investment off and let my profits ride. But I'll make those judgment calls as the severity of whatever's occurring makes itself present to me. So I have the ability to analyze these things. I see them coming usually before they happen, most of the time with a couple of days notice. So anyway, that's it. Hope you have a good one.